interest rate hikes, it's put financial pressure on homeowners, leaving many struggling to keep up with their home loan repayments and contemplating a forced sale. Now, these higher interest rates add pressure to hard-hit households carrying this amount of debt. Now, to understand the impact that an MPC hike announcement will have, we are joined now in studio by the Jawitz Properties CEO, Herschel Jawitz. Good morning to you.
Morning.
Let's start with the possibility that 75 basis points could be announced this afternoon. For those people who already have home loans, by how much do their repayments go up by?
So if we take a R1 million home loan, the payments now, and let's assume a 20-year home loan and you're lending at prime, not above prime or below prime, your current payments are just under 9,000 Rand as of now. If interest rates go up by the 0.75%, as you mentioned in your previous guest, those repayments would go up by just under 500 Rand. So it would take you almost to 9,500 Rand per month.
And since this interest rate cycle started, because this is what it's doing.
Yep. Yeah.
What are the trends you're seeing?
So just to kind of put a little bit of perspective on it, pre-COVID, that first lockdown, the mortgage rate or the prime lending rate was sitting at 10%. We then went into COVID. Interest rates came down substantially to try and support the economy all the way down to 7%. So interest rates dropped by 30% in the space of probably 6 months to a year. And we saw this sort of massive spike in demand for property in South Africa, especially in the first-time home buyers market. A lot of people renting properties now choosing to buy because at 7%, your mortgage repayments were almost the same as what you would pay to rent. And now we've started to see that sort of uptick. So from 7% to 9%, and if rates go up to 9.75, your repayments would have increased by approximately 2,000 Rand per month in the space of roughly 8 or 9 months since November of last year.
Yeah.
We're not seeing as of yet a real uptick in, for example, forced sales, reports from the bank of sort of lots more distressed sellers.
Yeah.
But I think that there's a lag in terms of the impact of rates coming through. So I think we are going to see some distress in the market.
There are ways to survive these tough times, Herschel. Let's start off with someone who is in distress. What are the few things to do in order to try and survive or perhaps escape the debt cycle?
So I think the first thing to do is that if you do start falling behind in your repayments, and I would apply that to any repayment, car repayment, home loan repayment, I think the first thing is to reach out to your lender and communicate with them that you're in some sort of financial stress and what plan could they potentially make. I certainly don't want to speak on behalf of the banks, but there may well be a plan to say you can only pay the interest portion on your home loan for a period of time, but at least you've communicated with them, number one. Yeah. Number two then is to really look to see where you can cut back. And the challenge we have at the moment is that food prices have gone up. Even though petrol prices have come down, they're still substantially higher than they were maybe a year or two ago. And whether you're commuting to work or you're using your vehicle for work, it's going to be difficult to find some relief in your commuting costs. And then you've got interest rate increases. But I would say that the last option has to be trying to sell your home when you're financially distressed. Because the property market at the moment, house prices are sort of going along very gradually. House price increases in almost all parts of the country are not keeping up with inflation. Yeah. And so the risk of having to sell your home, and especially if you've bought in the last sort of 5 years or so, is that you're not going to get your money back. And so what I would urge all homeowners to do is to take whatever pain you can in all other aspects of your life, whether it be sort of your social life or wherever you can find some money to save and cut back, because a distressed sale of your home is going to cause substantially more pain than trying to save in other areas.
Are lenders reasonable? Are lenders understanding when that time of pressure comes along?
So I think we've seen generally, and once again, I'm not talking on behalf of the banks, but I think we've seen the attitude from the banks exactly that, is that the last thing they want to do is to repossess a home. Financially, socially, the trauma it causes on the family unit. Yeah. And ultimately, when they repossess a home, everyone loses. The homeowner loses and the bank loses. And so what the banks have tried to do over the last couple of years, and I think we saw that from the last financial crisis in sort of 2008, 2009, is to try and work as hard as they can with homeowners who are in distress to find a way to either provide some relief or potentially to encourage them to sell so that the losses are not as significant as a home being repossessed.
You've already spoken about downsizing in order to see that you can keep your home. So deal with the other debt and see if you can get rid of that in order to protect your home. But if push comes to shove, consider selling before it's too late. That's one of the key advice that people get given. At which point do you determine that? Actually, I am at that point where I need to sell before it's too late.
No, I absolutely agree with you. It might sound a little biased because that's the industry that I'm in, but I think that the last thing you want to do is to get a legal letter from your bank. The clock is ticking, there's a legal process, your costs are going up of selling, and I think that, approach your bank, have a conversation with them, but you'll be very aware about, if you're falling behind maybe 2 or 3 months on your mortgage repayments, perhaps some of your other repayments are under stress. And almost all, in fact, all of the major retail banks do have programs where you can approach them and they will assist you in arriving at a decision to sell your home on the open market before it goes into some sort of legal process in an effort to minimize the losses and make sure that everyone gets out of the situation in reasonable shape.
What does debt-proofing your home mean?
So I think, I'm not sure of the specific definition, but I think it's about finding a way to keep your home aside from all else. So, for example, if we think that interest rates are still going to go up, there may well be an opportunity to talk to your bank about fixing interest rates, which does provide you with an ability to budget. But I have to say this, that what we see from our sellers and potential buyers who are looking to buy, that at the moment it's less about what's going on with interest rates, because don't forget the banks price that into affordability. So even people who currently have home loans, when they were granted those home loans, the banks would have provided some sort of buffer for them, anticipating that rates will go up. But I think it's the petrol prices, I think it's the food prices, and I say it carefully that I think it's this Eskom issue that's probably weighing more on the minds of homeowners and consumers than anything else. As someone said to me, it's hard to be an optimist in the dark.
Sheesh. Let's go back to the question around downsizing. Herschel. Apparently there are alternative ways of living. What are the trends you are picking up at the moment from people who are doing exactly that?
So downsizing, if you're currently in a home and you're looking to downsize from an affordability point of view, there's that option. But it's quite difficult to do when you're financially distressed. So what we're seeing certainly as a general living trend is that people in big homes, the cost of running big homes with water and electricity, security is becoming more and more expensive. So we're seeing people downsizing from large homes far quicker than they would have perhaps a number of years ago. That's number one. So we're seeing people downsizing into something that costs less to run, and that you can secure more. We're seeing a far greater trend in sort of micro units. So sectional title apartments of 30, 40 square meters. What is that doing? It's bringing down affordability. or increasing affordability and allowing people to get into the property market.
Sure.
Otherwise, that they wouldn't have been able to get in, had they looked at bigger units. So we're definitely seeing a trend of smaller, less cost of maintaining, and broadening affordability to allow more first-time buyers to get into the market.
Quick advice
Yes.
to first-time buyers.
Yes.
Here I am, having started a new job, and salary is good. I've got a small car.
Yep.
I want to buy a home.
Yes.
What are the do's and don'ts at this time of the economic situation in the country?
So I say this carefully because, it's a view. I'm a property man that it's generally always a good time to buy, and especially now in South Africa. So even though rates might go up to 9.75 by South African standards, most people are still borrowing in single digits, which is very competitive by South African standards. Bank lending remains very good, and the rate concessions and the loan to values remain very good. So it's not like bank appetite for home loans is shrinking. Number two, and property prices generally across the country are going up very gradually, 3 or 4%, far less than the current rate of inflation. So it's a very good time to buy. You just need to make sure that you've done your numbers, because what you need to do is build in a buffer, which the banks do anyway, so that if rates continue to go up, that you aren't caught in a squeeze and being forced to sell. And then do your homework in terms of area, in terms of commuting to work, taking into account petrol costs. But it is a very, very, very good time to buy, despite the interest rate cycle and despite the general state of the economy.
I once fell into a trap. Having been a first-time buyer, I borrowed against my home loan, because you have that pocket where
Yes.
it was unbelievable the amount of pressure I got under. The advice to someone who isn't aware of that and the hole that can get you into.
Yes. So just, general kind of advice would be that if purchasing a home means that you don't get to eat out once or twice a week, buy it. But if it's going to take food off your table to sustain your family, the basics, then the repayments are going to put you under pressure. That doesn't mean don't go and buy a house. If you can't afford a BMW, it doesn't mean you don't buy a Toyota, for example. Find a home that's perhaps in a more affordable area or a smaller home. But try and find a way to get into the market in a sustainable and in an affordable way, and make sure that you don't then tap into, as you mentioned, what you have in your home, and that's going to put you under pressure.
Herschel Jawitz, let me thank you very much for your time and the sage advice.
Thanks very much. Great to Thanks very much for having me.
Thank you very much. The CEO of Jawitz Properties. Well, that announcement, if you are looking out for it, is it going to be 75 basis points? There's some people are suggesting that it might go to a full percentage point. Well, look out for it at 3 o'clock. That's when the Reserve Bank Governor will make that all-important announcement.